Wednesday, July 30th, market analysis, Stan Ehrlich. We are at 1:54 California time. Wow, what a day. The stock market indexes didn't have that much volatility as far as the total high to low range, but it looks like it's getting a little bigger than the last several days. So maybe volatility is increasing. There's a good chance of that. So what do we get? Remember yesterday, I told you that we had some bearish engulfing ER sell signals on the SPY, the QQQ, and the NASDAQ, NQ. And I expected the market to start to go down, which basically it did until just before the close. It came back pretty good. You'll see in a moment. So we have today a lower low than yesterday by a substantial amount, which is 2 or 3 points. As far as the number of points is concerned, it's not that big, but the way the market moved relative to the lows, relative to the previous day, stuff like that, yes, it was pretty significant. The closing price turned right around for some of these futures contracts and closed on a strong, not all of them, actually closed on a strong note. Really weird. Very unusual. But it is what it is. Look at this. Now, this is 1 o'clock California time, and we are on the way up, and it kept on going until about 17 minutes after 1 o'clock California time, and then pulled back a little bit, and is almost closing in a few minutes. Higher on the day slightly. Surprise. It didn't make a new high for the trend, came up to some resistance. I don't see it as a bullish engulfing or a bullish signal. I still am bearish, looking for significantly lower levels. And I started to mention the October lows yesterday. If you've been following me for 2.5 years, you know that is the most important seasonal tendency market feature that I am aware of. The Santa Claus rally is another one. Sell in May and go away doesn't work very well. But I love the October lows. Now, we have topped out a fairly broad period of time before October, May, June, July, August, September. But it's usually September, August, and maybe late July, and here we are. And yesterday there was a bearish engulfing. So I think, like I said yesterday, we could have started yesterday the move down into the October lows, which could be very substantial. Sometimes those October lows are very sharp, big declines. I can't tell you that's going to happen. It's possible. It's done it in the past with some significance and not to be ignored. So I'm keeping that in the back of my mind. Now, we had a bearish engulfing, still good. Today's SPY came popping back up in the last few minutes after making it well below yesterday's lows to close barely higher on a rally. And actually, that's the aftermarket, sorry. It did close at 1 o'clock California time, slightly. Wait a minute. Something wrong here? Just a moment. No, good. All right, fine. Sorry. But I don't seem to have all my data here. 6:31 California time. I'm sorry. This doesn't seem to be working correctly on the SPY. So I'm going to have to pass on the 1-minute chart. That's bad data. The daily data chart on the QQQ looks fine. Bearish engulfing yesterday. No damage done. Rally back into the middle or a little higher than the middle of the range of yesterday was not unexpected at all. This rally popped up very substantially, and the 1-minute data is getting screwed up. Something is wrong with my connections. I'll have to make sure I get that right for you tomorrow. But my commentary is still relevant. So we have a bearish engulfing yesterday in the NASDAQ futures. The rally high today is above, yep, this is good data, yesterday's high, unfortunately, canceling out the NQ bearish engulfing. Remember, these are not always the highest high or lowest low for days, weeks, and months sometimes to come. They are occasionally part of the topping out and bottoming out process as well. So I'm hoping that's the case with the NQ. The 1 minute data, daily data on the YM, we didn't have a bearish engulfing. I've mentioned some people might want to call this a double top. That's coming down pretty substantially, closed significantly lower. I like what it's doing, no problem at all. Getting bearish, looking for a test of 43,951-ish, and probably down to 43,456, and maybe even lower than that. I certainly can't rule out lower than that because of the potentials of a move down into the October lows, which is more often than not pretty substantial. Check it out for yourself. Look at the 2 or 3 months before October, and of course, 2 or 3 months after October for each individual year, going back 30 years. And you will find that approximately 90+% of the time, we have had a visible, profound, significant October bottom. Much more to come in the future, including graphics, etc. Next, rally didn't make any new highs for the YM, and then it slipped back again near the closing levels. Now, we have a new low close in the Russell. It's not the same animal. It's starting to drop into the support levels. There's nothing wrong with this topping out at resistance. The first high was overbought. We did have one particular ER sell signal that wasn't good, but it is apparently, very possibly, part of the topping out process. I like what I'm seeing. I am looking for a test of 2197 and probably down to 2127. Next, it didn't bounce back. Well, it did a little bit, but it didn't close that way. It actually was making new lows real close to the close. Okay, interest rate futures. Today, of course, the Fed meeting. They left interest rates unchanged. But people, if you watch this kind of stuff, and I have most of the time for decades, you also want to pay attention to the language that's being used after they make the official, we're going up or going down this amount or unchanged, which was today's decision, unchanged. So if they alluded to, mentioned, even had under their breath, so to speak, something bullish or bearish about what they might do in the next announcements, that is going to move the market also. Bonds dropped down somewhat after a minor new high. As far as my little head and shoulder bottom is concerned, the neckline is a little bit lower, 113.20, and a couple of ticks lower than that tomorrow. So no damage was done. I just don't want it to get below 113.20, and I certainly don't want it to close below there, or it will cancel out this small head and shoulder bottom from July 8th shoulder, the head of the formation, 716, and of course, the bottom over here, July 24th. Now, obviously, people call this an inverted head and shoulder. I call it a head and shoulder bottom as opposed to a top. The bottom formation that's much bigger is still very much to be aware of, and we haven't quite broken out of it yet. That neckline is up here at about 115.17. So it's got to get above that, close above that. And the small head and shoulder does say it's supposed to get up to at least 116.20, which is above the breakout for the bigger pattern. So one small patterns inside of patterns are not all that rare. They're not super common. I'd say 20 or 35% maybe of these head and shoulders have some sort of other pattern inside them because they're relatively complicated patterns and they're usually covering several months, which this is. So I'm bullish on interest rate futures. This little dip is not doing any damage to that yet. Same with 10-year notes. Now, crude. More strength, got overbought. Coming up inside of the bearish engulfing that we had on June 23rd when I screamed bloody murder was going to go down, which it did for one big down day. And it's it's creepy going up sideways slowly over the last month and a half. So now overbought, this could mean it's about ready to turn down. It should mean it's ready to turn down. I don't see it turning down yet, but now we have the overbought condition and could get a red bearish engulfing like that one. Wait until you see platinum and copper. Wow. Huge. Next chart. Natural gas. Hey, new low close. For the 1, 2, 3, 4, 5 days in a row, it went right back up to the resistance level I've had on this chart for a long time, stopped cold turkey, and came down and closed lower and on its lows. Not oversold yet, but pretty close. So maybe 1 or 2 more days down, maybe 3 or 4. Oh, I don't know. An educated guess tells me 2.7, maybe even as low as 2.5. But this is in the midst of the next leg down. I don't, at this point, expect a close above 3.2, but I do expect lower lows and lower closes. My minimum downside objective is 1.1. Pretty big bearish move. Started talking about it way back here on June 25th, over a month ago. Next, we had a bearish engulfing. It didn't work yesterday. We had a new high, higher than the bearish engulfing last week in the heating oil. Disappointing, but it doesn't change the overall picture, which is a pop-up overbought situation and a very bad close. Since then, we haven't made any up progress or down progress to speak of, and we did, at the top of the market, in a resistance area, in overbought conditions, have a fantastic bearish engulfing sell signal on June 23. I'm still bearish. I want to see, very soon, closes below 2.3559, the bottom of the bearish engulfing on July 24th. Next, the bearish engulfing that we had in gold has been working great. Overbought conditions in a resistance area and sort of general bearish engulfing, oversold condition, 1 day down, 2 day down, 3 day down, 1 little day up yesterday, and another big day down today. New lows since June 30th, that's a month ago. We're about to, I think, break into new lows since May 20th, over 2 months ago. Looking for lower levels. I think gold is not going to have much trouble getting down to 3208. Yeah. Next, big down day in silver. Wait until you see platinum and copper. Just continuing the move down after being overbought with a divergence, higher high in price, but not a new high in the indicator. That's divergence. And it wiped out all the lows for about 2 to 3 weeks, somewhere in there. So I'm looking for a move down at least to 36.06, and wouldn't surprise me at all, 35.5, and even lower than that's quite plausible. The big support is way down at 33. Look at platinum. Big, huge down day. Not only that, it got oversold all of a sudden. It wiped out the first support area I talked about. It certainly reached it. The second support area that I've got marked here, it reached that and wiped it out right away and closed well below it. Now this immediately appears to me maybe too much, too quick, too fast, oversold, and a possible bounce. But I also have to say, I don't see that starting yet. I could easily say in the next day or two, we'd get down to the support area 1250. So don't start buying. I wouldn't necessarily cover my shorts either, but I would start to lower my protective buy stops. Wow. Copper. Holy moly. I think this is one of the biggest days in decades. This is a gigantic bearish engulfing. 2 days ago, I had a bearish engulfing ER sell signal. I told you this thing was going to come down. Well, I didn't expect this big, huge break. I think it has something to do with tariffs, but that's my guess. I don't like injecting fundamental information into my technical analysis techniques. I have to sometimes because this is pretty obvious. What can I say? Too much, too quick, oversold. It smacked right dab into one of my support areas. I looked at the 1 minute chart. It took it 2 or 3 minutes to crash most of this collapse. Okay, I'll even show it to you. It's that spectacular. Daily, okay, minute 1, and here it comes. Look at this. From almost the high of the rally, 1 minute later, you're starting to make lower lows for the session. Another minute later, you're crashing and crashed. Now, this happens to be 11:03. There's no 11:04. There's 11:05. Did the exchange stop trading for 1 minute? Kind of looks like it to me. And then we pop back up. That is nothing short of plain spectacular. Back to the daily chart and pull it over here a little bit. Huge. And I've lost my, it's recalculating strategy. So this will turn red in a matter of 10, 20 seconds, but I'm not going to wait for it. Now, oversold in soybeans, hit a support area, closed at the bottom. I wouldn't be surprised to see it bounce right off of the support. It's oversold. Just because it closed on the low does not mean it's going to go lower the next day. It seems likely. I wouldn't be surprised, but I've seen markets open higher and simply go right back up and never get lower than the previous day. But let's see what happens. I could get more oversold. We are barely oversold, just barely. Nevertheless, at the bottom of support area, at oversold conditions, this is just perfect for a bounce. Let's see what happens. Soybean oil is doing great. It's starting to get up into the resistance area, but it's overbought and it pulled back. So I'm not going to be surprised if it twiddles back down a little bit to, I don't know, 54.84, maybe a little lower than that, 54.12, probably the most. I don't think it's going to come back to 52.10. A little bit of a break for a short number of days and new highs. New highs could happen any old time. I'm bullish. My minimum upside objective I've been talking about for weeks and weeks and weeks, 62.62. Next chart. Well, finally, we're oversold in corn. I'm sorry, soybean meal, corn, and wheat have not been doing well. But oversold means a bounce likely. No new low in the indicator, new low in price. So we also have possible divergences. How far can we go up? I don't know, 281, maybe even less. This is not looking bullish. It's looking like a small bounce in a bear trend. Next, I have to say the same thing about corn. It's just not oversold, that's all. A small bounce maybe in a bear trend, but not even oversold, so I could easily say with a little more confidence, probably going to make a new low very, very soon. Bear market, looking for lower levels. And wheat, same damn thing. New low, almost a new low for many months. Since the war began. Wow. Nothing's holding this up. I expect new lows probably before the end of the week. Now, we gap down in Shell, a stock that I've been following. And I will put your, just a second, little marker here for the gap. There we go, because gaps are almost always closed. Like today's low closed the gap from about a week ago. You know something? Almost to the exact tick. The high before the up gap was 71.32. Today's low was 71.31. closed the gap, plus one extra tick, went right back up somewhat. Perfect. Almost to the tick. So now what? Now there's a gap to close above. Now we're going to bounce a little bit to close that. Well, I have to say yes. But we're still between overall a rock and a hard spot. So we're in a trading range. Next, a little lower on Apple. No surprise. I did mention I thought we could get down to 207.5. Listen to yesterday's commentary. You know, I've been teaching technical analysis off and on for over 40 years. So worldwide, I remember audiences in China that didn't speak English. I had 2 interpreters. All right, so I like the looks of this. It's not oversold. I think it's going to make new lows again and maybe come down to this support area at, a little under 200. And relatively quickly. That's Apple. Now, and that kind of agrees with my opinion in the stock indexes. The way Apple goes, the indexes go. That's the saying. Tesla dipped down a little bit, not too bad. Doesn't have any gaps to close. It closed its gap 2 days ago. Another good example of a gap closure. And pulled back. It's in this pennant formation. I'm waiting for another signal or a breakout of the pennant. My favoritism, well, I'll stop right there. And NVIDIA. Another new historic high. Overbought. It's about to turn down very soon. That closes out the high of the day almost. Overbought conditions. Prime situation. I'm not going to be surprised if it comes back to 148 or even a little lower to close another gap, 144. Now, the big historical support does start, and I'll put a line right here, and I'll put it off this high, and of course, I'll make it absolutely flat like that. So it's across 2 pretty important highs. One of them was the bearish engulfing ERSignal signal that was fabulous. So that's my first expectation, 152.95. And we're back to, guess what? E-mini. You guys have a great day and profitable trading to you.